Oh man, there is a lot of panic in this market right now. Bitcoin down another 2.3%, sitting at 26k. In this video, we're going to talk about how much lower can Bitcoin go. So many people are panicking out there. This is the one video you're going to need. We're going to analyze all the key time frames and give a pragmatic perspective on what is going on. You can see this head and shoulders pattern, which we've been calling for a while, breaking to the downside. You guys know we've been covering this off. The price target sits at around 24,100, but I'm going to show you there is a lot of support which comes before now and then, and what those key levels are. Now, before we get into that, we need to understand what is the perspective on this move, because a lot of people are screaming that this is really, really bad, but this is one of the most predicted and expected and needed pullbacks, right? We knew this was happening when we ran up here from 19,500 and spiked all the way above our weekly EMA ribbon. Did we expect we were just going to stay above here for ages without a pullback? No, it's healthy to have a pullback. It allows your RSI to reset, it allows the bulls to reset and get ready for a bigger move. Because this move went from literally down here on this wick, which is 19,500, all the way up to 31 without any break, right? These were positive weeks all the way up towards 31. And that is where the bulls ran out of steam. They couldn't go any longer, and that's normal. Like, you cannot have a sustained move continuing to go up indefinitely all the way up to 64,000, even on a crazy asset like crypto. But what we are seeing now is that pullback, a pullback into the EMA ribbon. And where does this EMA ribbon start? It starts from that 26,000 region, which we're about $300-400 away from now, and it goes all the way down to 24.7 now at the time of recording. So it's really important that if we have a pullback into that EMA ribbon, I'm personally going to be looking for entries at that point. Okay, I'm personally going to be looking for entries. Now, if you guys are looking for a place to trade, Bybit, Binance, Mexi, those are the platforms I'm using. I'll leave the links in the description. Those are affiliate links which support the channel. But of course, use any exchange you feel like using. Now, when we get that pullback, what I will be looking for is if we close below 24.7, that's going to become a little bit of a worry. Okay, a close below the 24.7, then we can say, okay, we're losing our trend here. We're losing our weekly ribbon. Until then, it's a healthy pullback. Now, I know it's not fun. I know the market will be panicking. I know every time we fall, you see the Fit and Greed Index start to drop down. We're now at 49, right? It's dropped straight into neutral. This is like greed previously. But this is what happens. The market flushes out these participants. You saw the recent meme craze as well, right? People get excited. There's lots of FOMO. There's a lot of people jumping into the market trying to make quick bucks. Then you need to flush out that greed. Get rid of that leverage. Get rid of that greed. Get rid of some of those tourists and get back to basics. And now you're seeing that we're seeing a pullback on the Fit and Greed Index. We've not been at this low of 49 since earlier in April. And in fact, we can now be breaking down towards this low. If you look at this low on the Fit and Greed Index, it was 33 on the 12th of March. Now, if you go back to when was the 12th of March, it was in this period here, when we were rising up from 19,500. Okay, so you're getting down to those levels, which shows that look where the price is. The price is much better than where it was at 19,900, but the level of fear in the market is equivalent because people start to get fearful when you see red days like we're seeing today and yesterday. But ultimately, as a rule, as my kind of religion, my North guiding star, if people are scared, that's when I want to be looking to roll on my sleeves. And I tweeted that yesterday, saying I'm rolling on my sleeves. As this market starts to get fearful, it means I need to do some work. It means I need to check my psychology and I need to check my conviction and see whether I want to add to my plays. When these candlesticks are green, do you know how easy it is to buy when it's green? That's when I have to do the opposite. I'm not buying. Why is it that the market needs to give me confirmation when to buy? I want to be selling into green. I want to be buying into red. So basic, but that's not easy, right? That is not easy to do. And that is what separates the average investor or the retail investor from your really experienced best investors in the world, right? They can manage their psychology and they can do the opposite of what the market is trying to tell them what to do. So now let's get into the nitty gritty of where are these key levels. And in order to do that, we're going to start with the horizontal support. Remember, this is the only TA video you're going to need. Don't get yourself confused watching other TA guys who are going to get you scared and fearful. Bitcoin's going to go to 18,000. Bitcoin's going to go to 12,000. Bitcoin's dead. No, it's irrelevant. Look at the data in front of you and follow the data, okay? So if we look at the data of where we're at, we fell out of our symmetrical triangle, which I'm going to show you shortly. And because of that, we're going down to this horizontal support. This is a horizontal support we've drawn for a very long time, which dates all the way back to the 15th of March. And you can see that this level, 26,200, is where we're trying to bounce now. If we fail to bounce at this level, or even if we do bounce but don't manage to hold it perfectly, we go back to the next level, that yellow line then sits at 25,000. And we know that's a very important line. right? 25,000 on this move is a very, very important line. That big, bold yellow line there, you can see where my arrow is taking you to. Very important support, right? Acted as support in August of 2022 and acted as resistance in August of 2022 and acted as resistance in February of this year as well. Then we finally broke through it, right? That's when we managed to get 31. So retesting this line here is a good sign. That's a good thing to be doing. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days if you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. This point here and this point here, coming back to retest that before then going on your next move, is a very solid thing to do. It's a good consolidation. We build some strength, we reset the RSIs at this level, and then onwards we can go. So 25 is that key level we're looking for. Now, where things start to get gnarly, like I just showed you, is a close below 24.7. If we lose 25, the next support comes in, of course, at 24,000, the psychological support. But that will then get painful. That means we're closing below our weekly EMA ribbon, and then it's okay to be fearful and calling out a little bit bigger price targets, okay? But that's where we're sat right now. We do have 26,200 where we're at, roughly at right now, needs to hold, then we're revisiting 25. Now, the important thing to note is as we're going towards that level, like I showed you on the weekly EMA ribbon, if we lose that 26,200 level, the weekly EMA ribbon starts to come into play. Okay, so if we look at the candlestick we're on right now, the weekly EMA ribbon starts at 26,000 exactly. So around that 26,000 level here, the weekly EMA ribbon will start to come into play, and that means we've got to check to see if it acts as support. So the bullish situation is it acts as support, we can collect some support, and off we go. But when we bounce from here over the next couple of weeks, we need to break above 31. Right? That's important. We can't just bounce off here and just kind of meander sideways. We want to get above 31 to keep the momentum to the upside. Let's also look at a few other very important patterns for you guys, because you guys know we were forming this symmetrical triangle, right? And this is a symmetrical triangle we're monitoring. We broke to the downside. You want to look to the price target. What's the price target of this move? First is pivot point, right? We met that. But then you want to take the measured move. And the measured move brings you down to 25,100. What a coincidence. Right? What a coincidence. 25,100. Again, that level we've been talking about, that 25,000 level. That 25,000 level is not only important horizontal support, but it's also support from our weekly EMA ribbon. So we'll be able to kill two birds with one stone there. Okay, so that's really important. We continue to look for that price target to play out. We also then want to look at our Fibonacci, right? We've broken straight through our Fibonacci's, and the next level of support comes in at the 0.5 level of the Fibonacci ratio, which again, 25,400 in this case. Okay, so we're getting confluence, which is, again, when various indicators are telling us the same story, you can build up the probability that your story is more likely to be correct. Because the reality is nobody knows what's going to happen. Of course, this is the market. Fundamentals can change the markets, technicals can change the markets, right? Macroeconomics can change the markets, new data can come out, a Fed official can speak, but we need to stack the cards in our favor. None of these YouTubers, none of these influencers can tell you, yes, this is what's going to happen in the next hour. No. We're just stacking up probability, and that's what a good investor does and a good trader does. So that's what we're looking for here on the Fibonacci. Then I want to notch down and show you the head and shoulders pattern. You guys are familiar with this. A lot of people have been talking about this head and shoulder pattern. Again, the measured move brings you down to 24,000. Hopefully this does not play out. This is not a fun target, right? We do not want to be getting there. Like I've just explained to you, that would mean we've lost our weekly EMA ribbon. Okay, so hopefully this doesn't fully play out. But again, you can see support coming from here, which is that 25,000, which we've been talking about. So hopefully this starts to run out of steam. We can bounce at 25 and we can start working our way sideways / upwards here and stop playing this pattern all the way down to the bottom of its head and shoulders price target. Again, if all of this just does not make sense, Ijaz.uk /TA, free TA course for you guys to work through. have a one look at this double top pattern. We formed this double top pattern. I showed you guys the price target will bring you down to 25,900, and you can see we're well on our way to our price targets. Again, if you guys want to trade these moves, these are such predictable, easy trade moves. Check out the links below. Ijaz.uk/Bybit, Ijaz.uk/Mexi. Check out those links. Trade. Those are the affiliate links. They do give me a kickback as well, but of course you get some amazing bonuses, but you don't have to use those links, of course. Okay. Now, what else do we have? We also have this, right? The right-angled ascending wedge. Now, when these break down, where do they break down to? Some people say you take half the measured move. Other people say you can take about 70%. I've taken about a half here, and that brings you down to 24,200. So again, we do not want this playing out. We need support to come from 25. Very important, okay? But up until 25, there's no reason to panic, right? No reason to panic. Like I've showed you, we're pulling back into EMA ribbon. Expected, it's healthy, it's good, but the reaction is needed from that EMA ribbon. If we don't get the reaction from the EMA ribbon, if the bulls do not step up and buy the dip, if we do not get that bounce from the EMA ribbon and we just keep falling through down below 25,000, then we're going to have to change our bias. But we're going to let the data lead us. We're not going to let our fear lead us, right? We're going to let the data lead us at that point. Hopefully you guys enjoyed the video. If you appreciate it, smash the likes. Make sure you subscribe. Don't forget to go watch this video here, and I'll see you in the next one.